I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and this episode is answering a question people ask quite often, in a way. What is, or can I get a third mortgage or another mortgage, right? If you have a first mortgage, a second.
Hey, Eddie and Tom, how many mortgages can I get on my home? Can I get like 3, 4? How many can you just stack? If I can find enough people and I have a low enough loan to value, can I get I just stack it? Huge line of loans. That's what this is podcast about.
And people don't actually frame the question, I think, can I get a third? What they're thinking is, can I get it? With the way they would ask us is, can I get another mortgage? I just want another line of credit. I just want another mortgage.
Mm-hmm.
They don't think of they don't think of it as in positions. And the reason why I guess what's really important for everyone to understand is every mortgage has a position. There's a first, a second,
mm-hmm.
and then anything beyond that, you would just, in the same order, you would do a third, a fourth. Technically, these are all positions, lien positions, and that's what those numbers are standing for.
Right. Every lender basically is a standalone entity, a standalone loan. And it's not like, it's one great big lender over your house and they just keep giving you additional loans. You actually, when you have a first loan on your home and you have a mortgage, that's a standalone lender. So if ever you needed additional money, you'd be going to a totally different lender. Or even if it was the same lender, it'd be a brand new loan, and that would be in addition to. So you're not just simply pulling equity out of your home and calling them liens or calling them loans. You're doing a lot more than that. You're actually putting a loan with a lender. And the big question is how many different lenders can you have on your home at the same time, right? That's another way of asking it. How many different lenders could you have?
A lender, a big bank can give you a first and second mortgage. One bank can have two different positions, but yeah, to your point, these are usually a separate bank has a first position, a second. But I don't want to get too. I think to make it really simple for people is that when they get a fixed mortgage, most people, right, they have a conventional loan or an FHA loan or a VA loan, right? Those 95% of borrowers. And those mortgages are in first position. You're not going to have a conventional loan that's in second. Okay. Those are all are FHA or VA. Those are all first position liens, or for mortgage liens. So when you get a mortgage, you have those mortgages are in first position. If you ever want to access equity and get an additional loan, you would get a home equity line of credit you don't need a home equity line necessarily, but you could get a home equity line or a fixed rate second mortgage, and they would go into second position. So, it's a lien on the home. It's in second position. And technically I'm not aware of any bank that will go in third position. So to answer the question is once you have a first and second position lien on your home, that's really it. You're not going to find another bank that's going to be in third position.
Now, there are situations where another bank will put a lien on your home, but it just wouldn't be considered for residential mortgage purposes. Like we had a borrower that had a small business loan that had a lien behind the HELOC.
That one was, what was that? An SBA loan.
That was an SBA loan.
Okay. So an SBA loan would also be a lien. But again, a different type of lien. The lien,
mm-hmm.
They attached it to the property, became a lien on it.
They attached it to the property, but the important thing is that it's not a residential mortgage lien. And the topic of this podcast is could you get a residential mortgage lien in third position? And the answer is no.
Right. Okay. So SBA loans, or if someone's going to put a lien on your property, if you don't pay a contractor who does a remodel on your home, they can put a lien on your property too.
Mm-hmm.
Those are just liens to make sure you pay them. So
there's all different types of liens out there. I was simply bringing up the fact that there could still be a money lien like that SBA. but the difference is that would be commercial versus that what we're talking about is residential, a true residential product. Are there third mortgages? The answer is no. There's firsts and there's seconds. There are no third mortgages.
Right. Okay. So if you have a first mortgage and you get a second mortgage, if someone wanted to access more equity, what would they do?
To access more equity out of your home, you would end up redoing either your first or your second. You wouldn't go out and get a third.
Correct. So yeah, sometimes we'll take a borrower, we'll take their first and second mortgage, we'll just get a new one, right? We'll just combine, we'll pay off both the first and second that they have and create a new one.
Mm-hmm.
And if they wanted some cash out, it all depends if they have enough equity. But yeah, we can create one.
Now, I do think this is important, and let's not spend any more than 45 seconds on this. Why does it matter what position you're in? Like who cares if you're in first, second, third, fourth, fifth, sixth? What does that matter? Do they not all play together nicely?
So when a foreclosure occurs, if you ever get into a matter of a foreclosure, the courts, right? The courts will actually order that your home is sold and the lien holders are paid off in the order of the lien position
of their position. That's why that position is so important.
So right, the lender who's in first position gets their money first from the sale of your home. Then whatever's left over gets paid off to the second. And if there was a third, theoretically, then would waterfall, or basically whatever's left over would go. And during the big financial crisis in 2008 and 9, we saw a lot of second mortgages not really completely
annihilated.
There wasn't enough money from the foreclosure sales to pay off the first lien.
Right, exactly. So the first positions were even tough. So forget
the second mortgages.
Yeah,
correct. So the lien position is the position in which the money it would be paid.
All right. Okay. So the short answer is, there are no real residential third mortgages available out there, at least at any decent rate at all. And if there was one available, it'd be so expensive you'd never want to do it. So really, your options are of basically redoing your first or redoing your second. And the only thing you'd have to keep an eye on is just making sure that you're within the loan to value caps. And as long as you're under those loan to value caps, you can redo your first and second, as many times as you want. Throughout the life of your home and your.
Right. And this is I think it's worth at least just mentioning really quick. If you were to add the loan balance of your first mortgage and the second, or, if you just added all your mortgages, right? The first mortgage and the second mortgage together, the bank wants to make sure that total amount does not exceed typically 80 or up to potentially 90% of the home's value. They want you to have at least 10% equity. Some banks are saying that, some banks that are doing the second mortgages want at least 20% equity in there. So,
and this all goes to the guys and the gals that talk about, 80 10 10s and 80 15 5s and 80 20s. It's all how you're splitting and who's, giving you, money that is leveraged and secured against your home. And it's just, who's in first position, who's in second. Anyway, so you hear those people talk about that. I love it. 80 10s, 80 15s, 80 10 10s. Hey, you got a guy 80 10. I got a guy 8 15.
So personal loans are not going to be liens on a property. They're going to just be personal. And the reason why that's why they have high interest rates is because there's no collateral.
Yeah.
That there is an option. I mean, like if you are looking for any extra cash, I mean, basically a personal loan similar to a credit card.
I think we should do a podcast on that. Collateral. Why are mortgages so affordable?
Right, because they have the collateral. The bank gets to go sell your house.
Big deal.
Get their money back.
Big deal. You go out and you get a loan to buy a ring for that person you're engaged to. There's no collateral.
Like a car loan. Technically, they'll repossess your car. So there's collateral on that.
There's collateral.
Like the title lien.
Right. Even though their value drops like a rock the second you drive off the curb. Yeah. But anyway, that'll be a podcast for another day. But I think that this was very, very good. to cover for our borrowers.
All right, everybody. So again, no third mortgages. Okay.
Sorry,
I hope
folks.
that helps. Let us know if you have any questions on this, and we'll be here to help.
Okay. Hey, thank you, folks.
Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com, and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.